Hey traders, and welcome to the back testing of the 20 EMA-R strategy. We're going to do the same thing. What I mean by that is start from somewhere near April, about 6 months ago here on this back test. And right before we get started, I'm going to show you the rules one time because as we back test, I'm not going to have these on the screen. So take a screenshot, read through the rules if you feel like you're uncomfortable with any of them to ensure that you know what we're doing as we're going through this back testing process. I'll read through them really quickly. Rule number one, price must break above the 20 EMA. This is for a bullish version of the strategy. Rule number two, the count starts from the most recent candle that closed below or above the 20 EMA. And it's actually the very next candle. You'll see that as we go through our back testing. Rule number three is a 38.2% candle must happen within the first 10 candles after that close above or close below the 20 EMA. Rule number four is the entry candle must close above the 20 EMA. Again, this is for bullish. And entry number five is count starts over with every close above or below the 20 EMA. Number six is a personal rule of mine. I do not enter trades if I am already involved in a trade. I wait until that first trade is either stopped out or hits my targets. Stops are 1 times the ATR indicator below the entry candle for bullish trades, and targets are a 1-to-1 reward to risk ratio. The opposite is true for bearish trades, and I'll bring this over just to give you a couple of seconds to take a screenshot of this, but I'm not going to explain all these rules. It's literally just the opposite of what we looked at. So hopefully you have pictures of those and they are in front of you. Now let's get started with the back test. Our first rule, we are looking for a break of this moving average, which is the 20 period moving average. Once we get that close below and that break, we look within 10 candles. We have 1, 2, 3, 4. That's actually another break. So now our count starts over after 1 and then 1 again. Our bearish count starts over right here. So now, do we see anything that looks like a 382 candle right after this candle? Yes, we do. We have a possible bearish 38.2% entry. What do we have to do? We need to zoom in a bit and ensure that this is a 38.2% entry by grabbing our Fibonacci retracement from swing high down to swing low. Sometimes you do have to zoom in quite a bit to ensure that this was an entry. So let's get this perfect and zoom in really, really far to make sure there's space and make sure that we have our 38.2% retracement in the right area. So even with the 38.2% retracement in the right area, we can see that we do in fact have space between the 38.2% retracement and the body of that candle. That means we have a valid trade. And yes, I am that meticulous with it. I actually zoom in as far as I have to see if there's space. If there's space, awesome, I have a winning trade, or I have a trade. If there's not space, I don't have an entry candle. So hopefully that's clear at this point. I personally, again, am just going to be using the ruler tool that you can see right here on TradingView. But if you felt like it, there's no reason you couldn't grab the position tool if it made it easier. Plant that on the chart. And this might be a better scenario for those of you, especially that are beginners, because if you're following that rule number 6 that I follow, where I do not enter a trade until the first trade has either hit targets or hit the stop loss, then this is going to make that process really easy by just using a position tool. Plus, the way we're going to look at optimizing for higher reward to risk ratios, it would be a good decision to use this at least for the 20 EMA-R strategy. Again, I do everything with a ruler, but I'm decently good at math at this point in my life. I can literally do math in my head to figure out what a 1.4 to 1 reward to risk ratio would be based on a stop loss. So that's the reason I use a ruler. It's probably best for you guys to use the position tool if you have it at your disposal. What's our next step now though? We look at the ATR of the entry candle, which is 42. 42 plus 22 is 64. So we have a 64 pip stop loss. And that means we are also going to have a 64 pip reward for our initial test, not 46. Dyslexia coming in, 64. There we go. So that, as we can see, hit our target. We would then take an arrow, or not an arrow, a vertical line, and place it on the next candle so that we have easy access to this, just like we did over on the 50 EMAP strategy. So we're going to continue doing this and take our time to back test all 6 of these months. Let's keep moving forward here. And something else I do want to mention is, even if this trade wins, I don't take another trade. I'm literally only taking one trade after the cross, and I'm staying in that trade till it either hits stops or targets. So as we continue pushing again after that winning trade, I'm not looking for more trades within, the 10 candles of the crossover. So here we go. As we push forward, we eventually cross up. This is not a 38.2% candle. We push forward again. We cross back down, making this our one candle. So the count actually starts from here. That might have been a little confusing in the rules. This is not the one candle. This is the one candle. So we go 1, 2, 3, all the way to 10, 4, 5, 6, 7, 8, 9, 10. Does this look like it could possibly be a 38.2% candle? This green candle actually does. So in order to ensure or to decide whether or not we have an entry, we're going to pull our Fibonacci retracement and we are going to zoom in as much as we possibly can. If we zoom in here, it's very obvious that eventually, I say very obvious, but you can see that our white line for the 38.2% retracement is below the body of the candle. Therefore, that would not be an entry. So with that not being an entry, we'll go ahead and delete that and keep pushing forward. We have no other candles that look like they could be an entry there. We start our one count from here. So we have actually this is the latest close above in which the body was touching the 20 EMA. So this would be our one candle. With that being the case, we'll grab our roller tool. We go 1 through 10. At that point, again, I've mentioned this before while we were learning the strategy, but we're just looking in these candles right here to see if there looks like there is a 382 candle that is bullish. And the answer is no. I don't see anything that looks like a bullish 38.2% candle. There is one right here, but this is candle number 11. I don't look at candle number 11. I look 1 through 10. So let's continue pushing forward. We need to see the break below the 20 period moving average. There we go. Is anything looking like it could be a 38.2% candle to the bearish side within 10 candles? Yeah, we have at least this one, right? This looks like it could be. So with that being the case, we'll check it. And this looks, I can tell it's not, but we'll check this one too, because I can see if you were a beginner how this may look like it could be a 38.2. As you can see, definitely not a 38.2. Let's check this one right here, which was candle number 7 or 8, I do believe. And it is, in fact, a 38.2% candle. Now, there's no reason to pull out your position tool unless you just want to. In this case, I can tell that that's a losing trade. So I'm just going to place a red vertical line right here. The next thing I need to see is price close back above the 20 period moving average. There we go. We close back below. I'm not seeing anything that looks like a 382 candle until this possibility right here. Let's check it with our Fibonacci tool from the high of the candle down to the low of the candle. Obviously, that is not a 38.2% candle. Do we have anything else? Well, if we're doing our count, this is number 1, 2, 3, and number 4 here. Looks like it could be a 38.2% candle, right? So we'll pull. We don't really have to. That was noticeably a 38.2% candle. Can't really tell if the stop loss, again, if I'm using my ruler, the stop loss would be 41 pips above the swing high. So I would just do this, go 41. I would see that the stop loss was barely missed, but likely hit based on the spread. So let's just check this out. We have 38 plus 41, which would be 79 pips. So 79 pips would have been hit for sure. I'm going to go ahead and count this as a losing trade. And the reason I'm counting it as a loss, guys, is because it was within like 1 pip. So that being the case, this is definitely a losing trade because based on spread, you would have been stopped out here. Otherwise, you would have been stopped out right over here. So a losing trade there. Let's keep pushing forward. We push below the 20, no trades. We push above the 20, no trades. I'm going to go quite quickly here, but as you can tell, there's no trades. Like there's no candles in any of this area that look like a 38.2% candle to the bullish side. You'll get really fast at this as you continue to test this strategy. But as we continue, the next thing we're looking for, close below the 20 period moving average, market pushes down. This for sure is a 38.2% candle and for sure is a losing trade. Next up, we have this candle and we have our push above, obviously our push back below. Then we get this candle that looks like it could be a 38.2% candle. Let's check it out. Pulling from the high to the low. And in this case, we're going to have to do some zooming in. Our Fibonacci lines are correct and we can see that there's space there. So this is a valid trading opportunity. We would then pull out our position tool if this is how you would like to do it. You would look at the ATR, which is 38 pips on this candle. You'd go 38 pips above your high of 22. 22 plus 38 equals 60. So 60 pips on the stop loss. Right there, we'll see if we can hit that 60 pip target. And we do. So we know we have at least a 1-to-1 in this case. We can put a green line here on our trade. Here we go. Green line. Awesome. Winning trade. As we push lower, am I looking for any other trades? No, I'm not. So I don't have to worry about that until price pushes back above the 20-period moving average. Then back below, nothing looks like a 38.2%. Back above, nothing looks like a 38.2%. Continue pushing forward. This here is not a 38.2% candle. Now this is one that gets a lot of people. I don't know if this is going to be a 38.2% or not, but really look out for the situation where price pushes up to a new swing high and then that very next candle looks like this, because a lot of times your eyes just naturally skip over these on accident. In this case, let's zoom in. We got to do some zooming here. We have not got a 38.2% candle. I don't know if you can see it on the recording, but the body of this candle is in fact below the 38.2% retracement. With that being the case, not a valid entry, so no reason to look at that as a trade. Pushing forward, we have nothing that looks like a 38.2% candle to the downside. Nothing, nothing, nothing. We push back above, we push below. This looks like it could be a 38.2% candle. For that reason, I'll zoom in and check it out. We do in fact have a 38.2% candle there, and it looks like that is obviously a losing trade. Now, in order to trade again, I need to ensure that this trade gets stopped out. So this trade has a 51 pip stop loss. That means I cannot place another trade until price gets up to right here. The only time I can start looking for trades is after this trade stopped out. Since this green candle is the first one that hits 51 pips, then that's when I start looking for new trades. With that being the case, let's see if we get anything. We push up, we get our 1, 2, 3 candle. Do we have a 38.2% candle on that third candle? We do. We can tell there's space there. With that being the case, we have an entry. So we'll bring out the position tool just to make this easier for you guys. And again, this is probably the likely scenario you should be taking, is using the position tool. We'll put the stop loss, 1 ATR under our entry candle, 46 plus our 39 pip down to the low of the entry candle is going to be 75 pips on the stop loss and a 75 pip target, which is easily hit at a 1-to-1. Therefore, we can go ahead and place our green line for a winning trade there. Moving on now, here we go. Below, back above, nothing that's looking like a 38.2% candle. We start our count over, close below, close back above, right here at 1, 2, 3. So that's why we start over from here. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Nothing looking like a 38.2% candle until here, but this is candle 12, so we do not count it. Back below, we start looking for bullish. Now we go back below here after our break above here. Back below, we got 1, 2. The third candle, in fact, is a 38.2% candle. That's our entry. You can tell that obviously won, so I'm going to put a green line here. If you wanted to put the position tool, again, guys, feel free to do this however you would like. You just put the position tool there. ATR of this candle is 47. You go to the high of the wick, which I can see. I don't know if you guys can see it on the camera. You'll be able to see your own candles, though, on your screen. That's 40 pips plus our ATR of 47 is 87 pips on the stop loss. Looking for a 1-to-1 initially, and we get that very easily here. So that's what our trade would actually look like. We already have the green line there. We don't close back above the 20-period moving average. Therefore, we have no trades until we do, in fact, close back above the 20-period moving average right here. And at this point, we can look for more trades. Does this look like it could be a 38.2% candle? Possibly. The way we check, pull our Fibonacci, we were wrong. So not a 38.2. We go down, we go back up, back down, back up, looking for anything that looks like a 38.2. This probably isn't, but let's check it anyway. A lot of guesswork here, guys, during the back test. If you see any candles that you're not sure about, again, just pull out that Fibonacci retracement to make sure you are picking the entries that do actually qualify for the 20 EMAR strategy. So we're pushing forward here. We're back below. No entries below. We go back above. This, I do believe, is going to be our 38.2% candle. And I am correct. So we have a 38.2% candle there. We can tell it's a winning trade. I'm just going to use a green line to speed it up time-wise here. And in case I'm going too fast, we broke below the 20-period moving average. We had no trades in through here because nothing looks like a bearish 38.2% candle. We then immediately broke back above the 20 period moving average and put in our 38.2% bullish candle, giving me a reason to buy and hitting a winning trade. We're now waiting for a cross back below. We get that cross back below. I got a question for you. Would this candle here be an entry? Hopefully you said yes. Here's the reason. Our count starts from the latest candle that closed below or above the 20 period moving average. This candle closed below. This candle closed above. That means this is our one candle. If our one candle is above the 20 period moving average and a 38.2% candle, we have an entry. That is obviously a 38.2% candle. Let's see what price did. We pushed up. It's obviously enough of a push up to hit our target. Remember, the stop loss is way below the low of this wick, so it didn't get anywhere near hit. And if price came all the way up here, it's pretty easy to tell that we have a winning trade there. Now, I do need to put the position tool on here. And what's my reasoning for that? It's because of my personal reason number 6. My personal reason number 6 says I don't enter another trade while I'm currently involved in a trade. So for this trade, I'm currently involved with a 40 pip below the low stop loss. So the low is 39 plus 40 equals 79 pips. Let's actually get to a point where we can put our 79 on our stop loss right about there. So there's my 79 pip stop and pushing up. Now, why did I have to do this? I had to do this because otherwise I could have started looking for an entry and found one right here. If I would have hit targets here, then this would have been another entry. What's the reason? Well, we have our entry candle. And again, I don't look for another. If this would have just went straight up and hit my targets, then I wouldn't have been looking for another trade even after the targets were hit if it wasn't 10 candles, right? So if, let's say the very next candle would have hit my target and I had 8 more candles that all stayed above the 20. I wouldn't look for another trade. But in this case, we have a close back below and back above the 20 period moving average. Therefore, I can restart my count right here. 1, 2, 3, 4, 5, and on the 6th candle, I get an entry. Now, if I would have hit my targets, I would have been able to enter right there, but I didn't. So I need to make sure I'm in line with all of my rules during my back test. Hopefully you guys can see the importance of that since I'm going through all of this with you. So at this point, I have no entry on this, nope, wrong candle, on this candle. So I continue looking for possible entries after a close below here. I can look for more entries, nothing to the downside, close back above, nothing to the upside until this candle. Let's do our count. We have our 10 count. Actually, again, remember guys, remember me telling you this was kind of a sneaky one. Right after our swing high, your eyes will play tricks on you and you won't really see this one. I didn't even see this one. I was thinking of this one being the next opportunity, but as I'm looking, you can tell that this for sure is a 38.2% candle. And it also for sure happens within 10 candles. It's candle number 7, and it also for sure is a losing trade. So there we have to print another loss. Pushing forward now, what do you guys see as the next trade with the way the chart looks right now? Hopefully you were able to say this candle here on this trade, win or a loss. Very obvious to see this is a 38.2% candle. Very obvious to see that it happens within my first 10. All of it happens below the 20 EMR, and obvious to see that it is a win as well. So green vertical line here for a winning trade. Now we continue. Can I place a trade here? Could I have placed a trade here if we had or had not hit targets? This is still within 10. We have 1, 2, 3, 4 on this big candle, 5, 6, 7, 8. This should be another trade, right? No, not for the way I personally trade the strategy. Feel free to test it and optimize it however you would like, but personally, I would not be taking this as an entry because I'm only looking for one entry per time we close below or back above the 20 EMA. So I wanted to explain that right there. Let's continue looking for possible entries after we break above. Let's do our 10 count. And guys, also, while I'm here, something else I want to point out, this does not count as a close below. This is not a close below. The green candle opened below the 20 EMA, but this does not count as a starting over. We don't start here at 1, 2, 3 because this candle did not close below and this candle did not close below the 20 EMA. So therefore, our count still starts right here with 1. Let's measure over and see if we have a trade from 1 pushing over 10. We have what looks like could be a trade right here. This is candle 11, so I don't even have to check it. Let's make sure that the candle we circled is not a 38.2. It definitely is not. I can tell. I'll zoom in for peace of mind though. As you can see, zooming in, we have our white line above the body of the green candle. So with that being the case, we have no trade there. Let's keep pushing forward here. We close back below. We have an obvious trade where? Hopefully you pointed this candle out. We close below the 20 EMA. We have a 1, 2, 3, 4, and on the fifth candle, we get an obvious 38.2% candle, which is our entry reason. This obviously didn't hit our stop loss, but if you want to check it, I will. So let's go ahead and go 41 pips above the swing high of this candle. 41 pips definitely keeps us from being stopped out. It's way up here compared to where price went. And we can see that we obviously hit our target. Therefore, I'm placing a green candle here. Now let's see, does this look like it could be a 38.2% candle? Maybe, probably not from my eyes, but let's see. So we pull down here. Nope, definitely not. And we don't have any other bearish 38.2% candles. Now we close back above right here. So we got to look for bearish. Bearish, is this a 38.2? Possibly. Let's check and see. Let's make sure that was a close above. Definitely was a close above. We're going to take our Fibonacci tool now and see if this is a 38.2. It is not. So with that being the case, we move on. Here we go, looking for bullish trade. Now we're looking up, we're looking up. This looks like it could be. Let's check it. It's definitely within 10 of the break. So we have a positive 38.2% candle here within 10 of the previous break of the 20 EMA. Therefore, we have a trade. Now this trade looks like it pretty obviously hit stops. Let's see though, 63 pips, down 63. Yep, we're stopped out of that one. We close back below. Is this a 38.2% candle? Let's see. Hey guys, so I noticed that I made a mistake and did not mark this as a losing trade while doing my double checking. So what I'm going to do is go ahead and plop this in here as a losing trade with a red vertical line. And let's get back to the video. Nope, no 38.2% candle. Now we have another obvious win right here. Break below, entry candle, definitely won. So I'm just going to put a green line there to save on time. Pushing forward, we close back above, back below. We have an obvious loss right here. As you can see, definite 38.2% candle on candle number one, actually. And it did not go down at all. So it obviously was a losing trade. Let's keep going forward. Push back above. We have no 38.2% bullish candles. Push back below. We have another obvious win. How so? We have our break. Our 1, 2, and third candle is obviously a 38.2% candle and obviously went down to hit profits. For that reason, we'll put a green line there. Break back above, no bullish candles. Break back below, no bearish 38.2% candles. Break back above, a very obvious bullish 38.2% candle. It's obvious to me that we hit targets, but for your peace of mind, I will do a position tool on this specific trade. 46 pips below. The low is going to be 30 plus 46, which is around 76. It was actually about 75. We'll go with 76 though, or somewhere near 76. As you can see, very easily hit a 1-to-1 reward to risk ratio. Another green vertical line. Let's keep pushing forward. We cross back down. We get no bearish trades. We cross back up. We get no bullish trades. We cross back down. We get no bearish trades within 10. Let's be sure. Coming from here, 10 candles is right there, and we have no bearish candles within that zone. Cross back above, no bullish trades. Cross back below, no bearish trades. Let's see if this possible bearish trade, it's 12 bars away on this red candle. That's the only candle that looks like it even could be a 38.2% candle. You could argue about this one, but I can tell from looking at it that it's not. I will go ahead and do this to give you peace of mind. As you can see, the 38.2% retracement is about midway through the body there. We cross back above, looking for the 38.2% candle to the upside. Do we get it? Maybe. Let's check. Zooming in here. We're going to check on a couple of these candles to be sure that we don't have one. I don't think we do. I'm pretty sure this is not one. So definitely not a 38.2% there. And I'm pretty sure this one's not going to line up either with a 38.2. It does not. So therefore we have no trades here, although it would have been great to, right? The market did push up like crazy afterwards, but unfortunately we were not involved because we didn't get an entry reason. That's going to happen from time to time, guys. That's very normal to see. As we push forward, is this an entry reason? Hopefully you said no. Why not? Well, we don't have a close, an obvious close back below the 20 period moving average. So we're not starting our count over 1, 2, 3, 4, 5. So our count has to start from where? Our count starts from all the way back here. And this is the 19th bar since the close above. So therefore, we have no way to enter that as a trade based on our rules. Now, is this an entry? Yes, it is. And we get it right there. So this was a win right here on this trade. Let's go ahead and put a vertical green line there. And what I'll do, I'll actually switch this to the right one so you're not confused. I grabbed the wrong tool. That's all that really happened there. Should have been a short position tool because we were going short. I accidentally grabbed the long position tool. But there we go. Same difference. Let's go ahead and delete that. We'll move this over. We close back above. We get no bullish candles. We close back below. We need to see if this is a bearish candle. Let's check it out. Yes, it is. We have a bearish 38.2% candle. Therefore, we have another winning trade right here. Now we keep pushing forward, pushing forward. We wait for the break above. We get it. No bullish candles, no bearish candles. Do we have a bearish candle right here? It's quite possible. Let's check it out with our Fibonacci tool. Pulling down, and yes, we do have a bearish 38.2% candle there. We have an obvious winning trade. We're going to go ahead and throw on our green arrow. Pushing down, and we don't have any other trades, so I don't need to see exactly when this one won or lost because we don't have any trades until we push back above here, push back down here. We've already hit targets on that trade, and we have no bullish 38.2% candles, but I do see a bearish trade entry that I missed. Be careful, guys. Always double check your work. Right here, possible 38.2% candle. Looks like it probably will be. And we do have to count our candles. This may not be within 10 candles. So let's check that. 10 candles would be from right here. No, it's not. The 10 candle rule saved us. This is the 12th candle. So we are good. No trade there. Pushing back above. No bullish entries there. Pushing below. No bearish entries. This green candle looks to me like it could be a bullish entry. Let's check it. And a no-go. That's not a bullish 38.2% candle. Let's do our count and check and see if we have any other trades. As we push over, this is our 10th bar, and none of those look to be bullish 38.2% candles. As we push down and back up, we start our count over. This is an obvious 38.2% candle. It's obviously within 10 for peace of mind. I'll show you the Fibonacci retracement, and it obviously is a losing trade, so we'll go ahead and slap that on the board there. And there we go. Pushing down now. We obviously have been stopped out of this trade. We get another loss right here. This is a 38.2% candle within 10. 1, 2, 3, 4, 5. Actually within 5. With that being the case, I can tell it's a losing trade. Go ahead and place that there. Pushing forward now, I do need to check if this is a 38.2. It does not look to be, but we'll check it anyway. Nope, not a 38.2. We go back down, back above. Looking for a bullish 38.2. It doesn't happen till here on this candle, and this is way past 10, or it's probably candle number 11. Let's see how good I am, actually. Oh, it's candle number 11. I'm so good at this. Right on. So that was candle number 11. We then have an obvious winning trade right here. And guys, just so you know, the reason I keep saying obvious is because whenever I see an obvious winning trade like this one, it's obviously a 38.2% candle. I'm saying and doing all that because of my own experience in the market, because I am experienced enough to tell that that's a winning trade. If you're not, feel free to use the position tool or the ruler every time. I'm just doing this to speed up the process of me backtesting with you guys. This video is already going to be probably 35 or 40 minutes, so I'm trying to speed it up as much as possible. Cool little rule here. After this was our entry, right? Since we closed back above and then back below, my count starts over. 1, 2, 3, 4, 5, and 6. Looks like it could be a possible 38.2% candle, but I need to know that I'm out of this initial trade. If I'm not out of this trade because of rule number 6, then I cannot place my next trade. Let's check. So on this trade, the ATR is 53. 53 plus 50 equals 103. Let's see if I hit my target in time. 103 is hit right here. So with that being the case, this could be a possible trade if I'm within 10. I don't think I am, but let's check it. Yeah, that's bar number 10. So this is a possible trade. So with that being the case, I need to measure this and see. And it is a 38.2% candle. So a 48 pip stop loss above that is going to be 48 plus 31, 79, and 79. does in fact get hit with a couple of pips to spare. Spread on this pair being pretty low, this would count as a winning trade at a 1-to-1 reward risk ratio only. So let's keep going here. As we push, we have a push back up, a push back below, push back up, push back below. We're not seeing any 38.2% candles until right here. And with that being the case, we have a candle that's on candle number 7. That is in fact a 38.2% candle. And we can look above the wick of this candle by 50 pips and see that it was not stopped out. There's the wick pushing up 50 pips. We're nowhere near stopped out. It definitely hit targets, therefore green on that one. That's our most recent trade. Actually, here on the Euro New Zealand, we took that one live. So after around 36 minutes of testing, because I had to explain it all, you can see that here we have the results of the last 6 months here on the Euro New Zealand. Our job now is what? To plug these numbers into a spreadsheet. Let's go ahead and do that right now. All right, guys, so now for the fun part, let's start plugging all these numbers into a spreadsheet. And before we get started, throughout that entire test, I kept saying things like, here's an obvious trade. What you need to understand is they're obvious to me because I have tested and traded probably over 10 to 20,000 38.2% candles. It's something I've done for the past 7 years. So I don't really expect you to just find them that obviously. It's okay for you to have to pull out the Fibonacci retracement every single time for these candles. It's okay for you to have to count 10 candles every single time. It's just I am accustomed to doing it very quickly, and what I just did was like as slow as I could possibly go, just for the sake of you having the ability to learn from a few of the things and a few of the nuance rules that I wanted to speak about while doing that back test. But again, I want you to understand it's totally okay if you don't go through and do it quite that fast or with that much, I'm going to call it guesswork. It's not really guesswork. Again, I can just see these things really easily because I've been doing it for so long and I've tested and traded so many of these types of candlestick patterns. So let's go ahead now and push the chart out like we did last time so that I can see all the numbers really, really easily. That looks good enough for me. Now we're going to grab our spreadsheet. I've already went through the process of typing in the Euro New Zealand on the pair because that's the pair we're testing, and the stop loss is set to 1 because for every one of these trades, we're doing a 1-to-1 reward to risk ratio. You should remember all that from in the 50 EMAP video. But let's go ahead and start with times. So times, I have 5 o'clock. I then have 9 o'clock. I then have, after 9, another 9. And then I can't see the red one. I made a mistake. Oh no. Okay, I have 1 o'clock. Next up, I have 5 o'clock again. Next up, I have 1 o'clock again. So there are my times. Let's now do dates. The dates are 3/29, 4/15. So 3-29, 4, not 1, 4-15. After 4/15, we have 4:20 and 4:27. 4:20, cool date, huh? 4:27. We then have 4:28 and 5:10. So now we can just type in if they were wins or losses. We have a green, a red, a red, a red, a green, a red. Awesome. Let's move on to our next section of candles, our section of trades. Here we go, pushing over. And here I can see all of these very easily. So this is where I'm going to start. Let's go ahead and get the spreadsheet. Here we go. And we have time-wise, 9 o'clock, 2100, 9 o'clock, 2100, followed by 5 o'clock and 1 o'clock, 5 o'clock, 1 o'clock, followed by 1700 and 1 o'clock, and 1 o'clock. All right, our dates are coming in like 512, followed by 524 and 68, followed by 611 and 620, followed by 623. Now for our wins and losses, we have win, 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 loss, win. Cool deal. Let's go ahead and move on to our next section of trades that starts right here. Can I see all the numbers very easily? Yes, I can through there. So let's go ahead and get started. Bring the spreadsheet back out. And we have the time of 9 o'clock, 2100 and 1700. 9 o'clock, wrong. 9 o'clock, 2100, 1700. We also have the times of 1 o'clock, 1 o'clock, and 1 o'clock. Pretty easy, right? That was easy enough. And we have the dates of 7-1 and 7-8. After 7-1 and 7-8, we have 7-13 and 7-16. After 7-16, we have 7-22 and 7-28. Now we just got to record the wins and losses. We have a win, a loss, a win, a loss, a win, and a win. Next up, let's go ahead and move on to our next section of trades. Pushing over here, I can easily see all these numbers, so I'm just going to start from here. Bringing back up our master spreadsheet here and going in with the times. Times are 1700, followed by 9 o'clock and 1300. Wrong way. Let's do that again. 9 o'clock, 1300, followed by, after 1300, we have 1700. After 1700, we have 1 o'clock, 2100, and 1 o'clock. And now we can move on to our dates. Our dates start with 8/23. Our dates go to 8/27. Then we have 9/8, 9/21, followed by 9/24 and 9/30 and 10/5. And we are going to record the wins and losses now. We have a win, a win, a win, a loss, a win, and a win. Final trade, at least what I hope is the final trade. I thought they were, yeah, final trade is a win. And I could have probably squeezed that into the last one, but we'll be fine. So let's go ahead and record this one. This one happened at 1300, which is 1 o'clock p.m. in case you were wondering. And it happened on 10/12. One of our recent trades that we actually had. It was also a winning trade. So there we go. The backtesting data is in the spreadsheet, and this spreadsheet does us the favor of not making us do any math whatsoever while still giving us the correct win rate that you can see right here, 65%. Really good performance over the past 6 months here on the Euro New Zealand. Also gives us what our total cash gain would have been based on our starting balance. Has our changeable risk per position, obviously. Gives us our total percent gain and our total drawdown as well. All of that while risking 2% on our trades. We got 17 wins and 9 losses, which is how we came up with this 65% win rate. We had 26 total trades. 8 pips just says 8 pips because we're doing ones in all these columns. The pip count is going to be way different if you're using the actual stop loss here and target here. And we had an average of a 1-to-1 reward to risk ratio. So that is how you would go about backtesting the 20 EMAR strategy. And just as an added bonus really quickly, I have already copied and pasted this data over here. And what I'm going to do is combine the New Zealand yen data that we got from our previous test to our Euro New Zealand data. To do that, we actually need to copy and paste this and put it into a separate sheet. So what we're going to do is copy this. We're going to go over here to File. We're going to open up a blank spreadsheet and we are going to paste in our data. You can then expand these cells so that those little number signs aren't there anymore. And what you're going to do is go to C right here. You're going to come up here to Sort and Filter. You're going to go to Custom Sort. You're going to expand the selection. So what this does, if it'll let me scroll up and down, it won't. It grabs all of the data that we have. And what we want it to do is to sort the cells based on, you're going to click Sort By and be sure that you're on a date because that's what we're actually sorting by, is sorting by the date. We're going to sort from the oldest to the newest date. We're going to click OK. And what that does is sets up your trades as if you actually took them. What I mean is that's going to date, even if you combine 2 separate pairs. We're going to go over this a lot in the next lesson, but just to give you a brief overview, whenever you combine the currency pairs you're going to have in your total portfolio for it to give you the total performance with everything that you have, with all of your backtested data on multiple currency pairs, this is something you'll need to do because this puts your trades in order as if you were actually taking them in order from the oldest date to the newest date that you have on your sheet. So what we're going to do is go ahead and copy all of this again. We're going to go back over to our blank spreadsheet, or our master sheet, not our blank spreadsheet. Back over to our master sheet, and we are going to paste in all this information. It's going to look ugly, but that's just completely irrelevant right now, obviously. Like, it doesn't matter that all these blues and whites, if you want to, you can just take away all that. We'll do that for now. Let's just go ahead and go here and get rid of all the color in the background. So there we go. We have no fill color to keep it from being super ugly. But what this does is now we've combined the data. And since we have all the data combined in the order as if we would have taken the trades, the reason that is so important is because we want to ensure that our drawdown metrics are correct. The only way for those to be correct is if the dates are in order, if the trades are in order. So we're going to go over that yet again in the next couple of videos in a lot more detail. Just wanted to give you a brief overview and let you see what just these two currency pairs would have done over the last 6 months. So over the last 6 months, this would have created 53 trades just trading these two currency pairs, which are the two currency pairs that tend to perform. I'm not even going to say the best. There's actually two other currency pairs we're going to add to the 50 EMAP strategy and the 20 EMAR strategy that perform in a very similar way. But these two strategies perform really well on these two currency pairs. So with that being the case, we had 53 total trades just with these two pairs over the past 6 months. We had 33 wins and 20 losses, giving us a 62, almost a 63% win rate. We have a 28% gain with an 11% drawdown, which is really cool to see. But now that you understand how to completely backtest the 20 EMAR strategy and how to plug all those numbers into a spreadsheet, let's move on to the next video in the backtesting course, where we're going to talk about optimizing for your trading entry. Really cool stuff coming up. Can't wait to see you there. See you in the next video.